Hi, good evening, guys. As I promised that I said in my story, is that this is okay because I've just narrowed it down. I mean, if you can see the 10 points that I put inside, essentially some of it are quite related. So these are the things that I want to share with you guys. Okay, first of all, before I share this uh, these setups or this chapter, I would like you guys to have same no obligations for you guys to follow, nor will it ask you to change the way you see the market. Okay, you just keep an open mind, but this is how I'm going to share with you how I understand trend and what methods I use to define a trend. And as I was in my stages, when I mean from the moment when I started out, and then when people tell me that when I read from what I knew from trading, is that we always trade with the trend, right? We never fight. Don't I mean do not go against the trend. We always like to go with the trend, right? So I'm going to share with you my personal journey going about that. All right, so let's just begin. So understanding, I mean the first today is so I'm going to go to is this one, which is understanding trend. Okay, understanding trend and methods to define a trend. So before I explain my point, I will always it's best is always to start with an idea, okay, about how we see a trend and how I define a trend. So when we look into a trend, okay, so we're going to start right now. When we look into a trend, most important thing in a trend, right? To me, the one that important is that time frame. Okay, time frame is of very important into how you define a trend, whether is it up or is it down. Okay, that is one thing. And why do I say that time frame is important when you define the trend? Because there is a lot of time frame that you can see in the market. Okay, we have the monthly time frame, we have the weekly time frame, we have the daily time frame, we got the 4-hourly or the H4 time frame, and then followed by the H1 time frame, and then followed by the M30 time frame, and then M15, and so on so forth, right? This is what we all knew. Okay, so the thing is, right, when we look the basic thing that I share with my students and most of my peers, or most people who ask me about trend, right, the most important thing is that when you trade the markets, right, you need to see what is the trend doing, and this is called, and it must be associated with is a higher time frame trend. Is always try to look into two, okay, only two time frames that you need to bother with at the moment and in the starting, while you are starting out in this trading, right? Just concern yourself with two time frame will do, which means your higher time frame is the trend, okay, later I'll explain, and your lower time frames is your entry. Just keep that in mind. Okay, keep that in mind. Higher time frame trend, lower time frame entries. So in this case, only work in the pair. For instance, right, if you are looking at monthly as your higher time frame trend, okay, I just put HTF, okay, higher time frame trend. If your monthly is a higher time frame trend, that means your lower time frame trend for the entry is the weekly. Alright, and then I'll just put ETF, and so on and so forth. So if you're looking at daily as your trend, then H4 will be your entry time frame. Okay, and some people will say H4 is the trend, H1 is the entry. So always work in, for instance, right, your trend need to be a higher time frame, and your entry is on your lower time frame. But what kind of entry triggers are you looking for in the lower time frame for that entry? That will be another thing altogether. Okay, just remember that time frame. Okay, so that is this one that I had this I did on my own. Okay, so as I said, that one of the most important aspect of trading, but very much misunderstood by most traders, even myself. Okay, as I was starting out a couple years ago, is understanding market trends and patterns. All right. So in understanding trend, okay, you need to make a judgment call. Okay, where prices is most likely to go after a given price action signal has formed. Okay, so you will learn how you define if a trend is up or down, and then how will you define that start and the end of the trend. Okay, so remember that in any pair that you make, you can only do three things. You can only uptrend, higher highs and higher lows, downtrend, lower highs, lower lows, and then if we are ranging, indeed we can see higher lows and we can see lower highs. I'm going to make an example in this case. Okay, so for instance, I'm going to give a graph description. Okay, like for instance, if you see that, let's assume that this is a daily trend. Okay, let's assume that this is the you open up your charts, and then you open up your daily, and then this is what you see. Okay, you open up your daily, and then you see that market here. Alright, so in this case, what is market doing? Market is ranging. Why? Because in this market, we created a new high here. There's a high here, but there's no new high there. This is the last lowest point. When price go down, it does not break this lowest point, and then price go up again, it does not break this previous high. Okay, it goes down, it does not break this previous low. So in this case, we are ranging in the daily. So when in a ranging market, okay, the ranging market, there are a couple of ways in which you can approach this. Okay, there's a couple of ways that you can approach this. Personal wise, for me, right, when I see a market is ranging, I'll be very, very cautious to enter any kind of entries. Let me tell you why I'll be very cautious. Because the thing is, right, in actual sense, when we look at this ranging market, ask yourself, who is inside this ranging market right now? Okay, first of all, let me tell you, first, there are buyers here, right? There are buyers, but there are also sellers, right? Okay, there are buyers here, there are also sellers here. 1, 2. There are retail traders here. 3. But what most important thing is, the big boys are here. Alright, the financial institutions are here. Why do I say that? Because usually when you see this ranging kind of patterns, when market is not making new highs and not making new lows, most of the time, I'm not saying to say that sometimes, but most of the time you will see it can either come from a downtrend, in this case. Alright, in this case, market is on a downtrend, creating new lows here, lower high here, lower high here, new lows here, and then market stop making new lows, right? Stop making new lows, but is there a new high? Not as well. So in this case, can we buy? There is no entry trigger. Can we sell? There is no momentum. So in this case, there is no real price action, no justification for you to enter any kind of buys or any kind of sell. Alright, so the thing is, once you know that if on the daily we are moving sideways, in this case we are ranging, okay, and this is your higher time frame trend. Your higher time frame trend tells you that you are ranging. So is there any justification for you to find any kind of entries in your H4 or in this case? There isn't, right? Let me tell you, if you ever take in H4 for entry in this kind of ranging market, you know what will happen? I tell you, you will go, after a strong push, you can see a strong push down. After a strong push down, we can see a strong push up. After a strong push up, there's a strong push down. The thing is, like, instead of making rational decision about the buy and sell, you are flipping a coin, and then you'll be over trading. And then by the time you are buying from here, by the time market reach here, right, it will make it manipulate. It will look like it want to break out, and you will hold your trade until it comes over here, and then you will think, oh no, it's going to go down. And then what happened? Okay, in this kind of scenario, what happened? Market goes up here, and then market goes up here. They say, yes, I tell you it's going to break out, but then it just does this. Ever happen, right? So what this is called is actually a stop loss hunt by the big boys. Okay, because most people who buy from this position, or their stop loss is over here, right below the previous low. Am I right? And that is where their stop loss has been taken, and once the stop loss has been taken, and that is where the market push. Alright, so in this kind of scenario, so the best way, one of the best, safest way and conservative way for you to avoid this kind of mistakes, okay, for this kind of mistakes, if you see that the market is ranging, okay, always wait for the breakout to happen. Okay, in this case, this is the previous high. In this case, you can see the previous low. Wait for the breakout to happen first before we take anything. Let's say if there's a breakout here, okay, assuming, let's say assuming, if there's a breakout here, but if this market is coming from the top and going down and moving in this method, right, more often than not, right, could be a false break. Okay, it could be a false break. Why? Because price have already went down very low, so it could be in an oversold condition. So when market has been oversold condition, we want to look for buy, we do not want to look for sell, and vice versa for market is in an overbought condition. If market is going up, right, there will be a time when market will just come down. Okay, and for you to understand about the reason as to, this is my own views as to why this kind of thing happen. I mean, like, why does it went up until so hard, and after that you drop like very fast and all that. Let me give you another scenario. I mean, I will talk to you about momentum, which is in one of the subjects which I put earlier on. Let me give you some examples. Okay, some example about momentum. Okay, and why does the market behave in this way? This is based on my rationale and based on my thought process. You can agree or don't agree. Okay, so you see, as the market moves up, right? Okay, so in this case, like, we can see there's a uptrend, the slope is still there. Okay, as it go higher in this case, okay, and you can see a sharp steep slope going up in this case, then a lot of thoughts will come to your mind. You will say that the momentum is strong, the bias is strong, we are not looking for a buy, don't look for sell, right? But the thing is, right, as it goes up and up and up, right, the momentum will start to build up. The momentum of sellers will start to build up, because, let me give you a reason why. Because in any market, it will, when price goes up, right, it is going to find a supply zone. Okay, and the supply zone can be a previous structure which is from perfect in the past, perhaps, where market came down previously before here, and then market goes down here. And then just think of it. Okay, now I'm going to give you one scenario. Why in this case, when price is moving up, you all should be very, very careful about taking any buys. Let me give you an example of a person. Okay, let's assume that you are a runner. Okay, you are an athlete who keeps on running. When you are on the flat ground, running high here, you are running here, your energy level could still be good. Okay, you take a small rest, you continue to run, you take a small rest, and then you push yourself a bit more. Now let me ask you, the more steeper the slope, will it take more energy for you to run? It will, right? So now as you keep on pushing yourself more steep, and more steep, how much of your energy is going to lose? A lot, right? And once your energy starts to loosen, there will be a time where you will exhaust, and then that's it, you give up the race. And that's exactly what happens at the market most of the time. So when you see like the more steeper it is, the more dangerous it is for you to join. Example, let's just look at gold. Look at gold. Look at this. This is the daily time frame, right? Look at this gold. Look at this. Alright? Imagine yourself as being the runner in this case. So in this case, guys, we are pushing up. As you're pushing up, right? Look at the slope. It's not really strong. Yes, there's still enough energy for this guy to go up, right? Okay, and then this is where it starts to get a bit steep, right? And then you take a small rest, and then it goes it goes even more steeper than previously, right? You want more steeper, and as it goes up and goes up, and that is where the energy of this guy starts to fade away, and that is where he gives away, and that's it. He's not going to finish the race. And that is why from this position, it is not a surprise that it dropped from 1900 to 1780, which is nearly around 1000 plus over pips. And that is the reality of the market. Okay, if you don't believe, you can go to any market to check daily. Why after every steep run, right, it went down drastically? It's the same logic. See, this is very steep, right? Compared to this is crazy. And after that, free fall. For how long? This was on 10 August 2020. It went on a free fall all the way until here, which is around nearly to 5 months. 5 months. 5 months. It took a rest very much. Okay, so in this case, right, so when you define, so this is where you need to be very careful when you look at the market from just one perspective. Okay, let me just go back to this example. Okay, all right. Okay, so uptrending, higher highs and higher lows. Sideways is ranging. So this is why I say, first and foremost, before you make any trading decisions, you need to see your time frame for looking at trends, and then your time frame for looking at entries after the identification of a trend. You have to see a higher time frame for your trend, and you have to see a lower time frame for your entry that supports your higher time frame trend. Okay, so depending on what kind of trader you want to be and your risk profile and appetite. So for instance, the higher time frame trend is a weekly, your entry time frame is on the daily. If your higher time frame trend is in the daily, and then your entry time frame is the H4. If your higher time frame is the H4, your entry time frame is the H1. And the thing is, like, with each of these time frame, right, the way I always believe is that the higher your time frame is, the more pips there is. If you get your entry signals right and you get your entry level right, the more lower time frame you go, the lesser pips you will get, unless you are, very good into making a lot of pips into lower time frame. Then of course go ahead. Okay, but this is based on my belief. Okay, so as the list goes on, I like to make my list of entries on H4, as it gives me a more reliable price. And the lower time frame you go, the less reliable is the price action signal. But that does not mean that you can't trade the lower time frame. Sometimes lower time frame is good for intraday trading. intraday trading, which means you find H4 as your higher time frame and your H1 as your entry time frame, or the M15 as your lower time frame. But it's all about practice. What you want to do is that you want to be very, very, very familiar with at least 2 time frames first. Why? Okay. Why is there a need for you to be familiar with 2 time frames first? First of all, right, let me just give you an example. Okay, let's say, okay, monthly, weekly, daily, and H4, and then H1. Okay, the reason is, right, as I starting out in previous, when I was starting out as my trading, right, I always start with daily and entry at H4. Alright, and then once I get after a few months and years of familiarity with how the daily and H4 works, only then I went into understanding about monthly and weekly. So you guys need to be familiar with the higher time frame first before you want to understand how the lower time frame works. Okay, so that is because after you have familiar with your 2 time frames, you have good consistent results from these 2 time frame that you are always adopting, and then you will start to learn this, and that is where you will see the big picture of the market, and then master what is called the multi time frame trading. And multi-time frame trading takes time. Multi-time frame trading takes time. But the best way to achieve, one of the best ways I would say, to achieve the multi-time frame trading is for you to start with a realistic view. You can't see everything at one go. If you are a new trader or someone who just started out, even those traders that are not new could not really master multi-time frame trading at one go. Never. It can never happen, because you need time to develop. You need time to develop and understand why the daily goes in this way when the weekly is moving that way. Why the weekly move that way when the monthly is going this way. You need time to develop an understanding. So make sure you all take the time and just work on 2 time frame first. It's either here, maybe here, anything. Just make sure you just focus on 2 first. Okay, so let's continue. Okay, so in this higher time frame, right? Okay, so for defining trend, so in the defining trend, right, you need to see the structure of the market. Okay, so in this example, right, from a low price push up to a high point and then make a higher low, in which this drop does not break this previous low, but instead it breaks this previous high and making a higher high, then we can say that the uptrend is confirmed. Okay, buyers push up again, beating all record high. Buyers in control, uptrend is confirmed. And then the buyers strong, pushing up high and the long wave. The sellers push down, but not as strong as the buyers. It's a short wave pushing down. You can see this either on a H4, on a daily, it's up to you. So if you look at this from the daily perspective, then it's uptrend. Okay, and the downtrend is vice versa. Okay, from a high, low, lower high, lower low. So you define it as a downtrend. And this is where I'm talking about. There's no new high, there's no new low, there's no break of support, then price is ranging. So price can only move 3 ways. Forget about this first. Okay, uptrending, higher highs, higher lows. Downtrending with lower highs and lower lows, and sideways ranging with higher lows and lower highs performing. Okay, so for instance, right, so I'm going to give you an example. Let's go into an example and see whether can we define a certain trend based on whatever that's happening in the market. Okay, so like for instance, if you look at your daily for gold right now, is the market uptrending? No. Is the market downtrending? No. Then what is it doing? Sideways. Sideways. This is the last high. This is the last high here. This is the last low. and it's moving sideways after a strong push by the sellers to downside. So what is this telling us? It's telling us that market is, who is in here? Retail are here, big banks, big boys are here, buyers are here, sellers are here. Who's in control? Nobody in control. So with this kind of ranging market in the daily, which is your higher trend analysis, okay, in your higher trend, price is not, in this case, we want to know, is market trending? Is not trending. Okay, don't make use of this information that you see here. This information is no longer required. All we care now is this, what is market doing right now? Is market breaking new highs? No. Is it breaking new lows? No. So what is it doing? It is ranging. So in this kind of ranging market, right, see, a strong push up, a strong push down, a strong push up, a strong push down, a weak push up, a weak push down, a weak push up, a weak push down, a strong push up, another strong push down. So there is no way that you can trade this market given these current conditions. So in this case, leave it. We do not want to enter, and that's why, for instance, right, example, right, let me give you an example for Euro or C, the one that I took, alright. Because when I look at this trend, you look at this trend, right, yes, it's an uptrend, market making higher lows, higher highs here, higher lows here, higher high here, higher lows here, higher highs here. Now, how many higher lows, higher highs can you count? More than 3, 4, right? In this case, I felt that the market has been overbought, which is why I said it has to go down. Okay, it's overextended to the upside. And then in the H4, I can see that there's a supply zone here, triple top, one test, okay, one test, then it went down. People can say it's a retrace, but this is actually a double top, and then it went down again, and I anticipate that it will come up again to retest the supply zone before going down, because it has failed to break the market over 2 occasions. And where will it likely to go down? Most probably around here, back to the demand area. In the H4, we can see this is a demand, drop base rally, where you all will learn in one of my topics later. Okay, and that is where price now is moving down. So the thing is, right, whether or not is the market trending up or down, it all depends on how do you see the market. Assuming, I give you one example. Let's assume that, okay, so in this case, just like the same example, there's a low here, there's a high here, there's a higher low here, okay, there's a higher high here, and then there's a higher low here, and now there's a higher high here. So in this case, we identify that market is an uptrend, okay? And when you open the market in the daily, you see that market have already made the higher high. So the thing is, if you are a seller, if you are a buyer, would you buy at higher high? No, right? Where will your buy materialize? Somewhere around here, or somewhere around here. Do you want to sell this uptrend? There is no break of structure to suggest that this price, that this trend is going to go down, right? There's no break. Until we can see a break of structure, then we can define that you want to go down, assuming in this case, and depends on how is the strength of this push down. If this push down is very big long candles and break this higher low here, which means that the next push up is probably going to be a double top. To continue this push down here, this is the first warning that you want to go down, because you broke this high low, so there is a sell setup. So what is the sell setup needs? We need to wait until you came back to the supply zone, and then good for a wait for a good price action signal. In this case, good for a price action signal at this supply zone for us to look for a short. It's the same call that I made for Euro Aussie. Okay, it's the same call for Euro Aussie. Okay, where is the warning? This is the warning that this market want to go down. Actually starts from here. Okay, before this has been going up and up and up and up. Right, this is the warning. 1, double top, 2, and that's it. This is the third one. And if you look at the daily, why I say that you want to go down, because I anticipate that, and you can see from here, right? Because I anticipate as price push up and up, right? The high is very near to each other, and you see inside bar here, inside bar fakey, and then people see this as an inside bar breakout, but actually the inside bar breakout is actually an inside bar fakey. In this case, price never completely go out of this mother bar here. So now it want to escape the low of this mother bar, and then inside bar will be the next lesson that I will go to you guys. Alright, and looking to, so can it move sideways? Why not? It can still move sideways, because there is still this pin that is stopping this pair from going down. Right? Now we do not know, because right now, can it break this pin? There is that possibility. Why? Because of this bearish pressure. Bearish pressure, which adds to another way about trend. Another way about trend that you want to take note is the closing price. Closing price, and then pressure. Is that selling pressure or is that buying pressure? Okay, you want to take note of that, because in this case, right, price in this scenario, okay, price close on top here. Alright, price starts here, try to push up, can't, get pushed down. So closing lower here, price goes up, found resistance, cannot push up, goes down. And in this case, price closing prices are lower now. Lower closing prices. So in this case, the trend slightly may be down, but will it go down here? We would not know. Okay, I would not know, but I'm just buying based on this pressure. Okay, so as I was, because when you see trend, right, in the past, what I used to do is that when I see this kind of trend, right, and then I would make that mistake of buying at high prices. I see this candle closing bullish, right? So what I will do is that I will go to the H4 and to look for buy signals, but that is not going to work out. As I say, if you see that the price as market has already made a higher high, why are we going to, why must we look for a buy if this is your daily and market already closed higher high? So you have to take note into consideration that before you want to go out for any sell or buy. Okay, let me see this example. Okay, so this is one of the example that for the pound USD way back previously before. This is the low, this is the high, and this is the high low, and this price make the higher high here. Okay, so this is higher high here. So as price goes down here, this is a correction move, and then after that price as goes down here very strong, price came back again and became an inside bar. An inside bar, and then we test this demand zone to go up. So first and foremost, identify the trend, price making higher lows, higher high. So I'm looking only for a buy, but notice the last few H4 candles showing that the market is still making a correction in this case. So I hold and did not make any entries yet, not even sell, because I already identified the general direction of this pair, which is to go up. Okay, so what happened? As price rotated lower here in this case, the price is still going into the correction here, right? So all I need was an entry trigger to enter a buy. So it can be for inside bar fakie or bullish engulfing to suggest me that the buy is back. So in this case, as price goes down here, and you can see this is an inside bar here. Before this inside bar, price is pushing up. Okay, as inside bar here in this one, this is where the inside bar false break happened. Okay, bullish engulfing at the resistance, turn new support here, form after a false breakout of this inside bar here. So that is where when this push up here, right, we can enter manual, put our stop loss below this engulfing, and that's it. So a fakie have happened and a bullish engulfing form, but my buy order was quite high, so there's two school of thoughts. Remember, for me not to enter after bullish engulfing close, I want to enter with confirmation. Okay, if the bullish engulfing form and the next candle did not move prices higher, there's no confirmation to go long yet. So in this case, right, after this bullish confirmation, price, the next candle looks is a confirmation that price wants to move higher, which is why I enter the buy. Okay, and after that, this is where it, and this is how it happens, and this is what happens after that. Okay, and then you set your take profit accordingly. And that's it about market trend so far that I can share with. Okay, most important thing about trend, right? But all this is really about practice. Okay, just work on the market structure, work on the psychology of things, I would say. Okay, like in this case, like remember that if you identify it's an uptrend, right, you do not want to buy at higher high. Okay, you want to anticipate to buy in the higher low. So for instance, another way for you to mark the market in this case, for instance, right, okay, if you have missed the market, right, the most important thing is to at least mark the nearest strong demand. So in this case, I will mark my demand in here first, and then the other demand, and that's most probably is here, and that's it. So what we want to do next, right, is to wait for, we are not going to buy from here, okay, because price already make a higher high. Okay, in this case, we are going to wait, and when this candle is moving down bearish, right, please do not sell. I already identified this as an uptrend. All you want to do is wait for price to come back to demand and then a good price action signal to take this buy up. Okay, let's put it into test. Okay, assuming okay. Okay, so what is this pair doing? Uptrend, right? You can see that. So where is the last demand here? There's a strong demand here. Okay, and also a higher low, price move higher. So if price want to come back down here, and that's what we want to make a buy. Another demand would be probably around here. Okay, but in this case, price just, okay, price starting to push up after a long series of down, so there is still room for it to go a bit higher in this case. So we want to wait until price go down here. So you want to backtest to see how this work out first before you make a process out of it. Okay, I can see an inside bar here, inside bar fakie, inside bar breakout. So this indicates direction. So any move down is probably a retracement to go higher. Okay, so we see. Alright, so if you see market come down strong hard here, okay, it reject this previous here for a while, but then it moved down here to another demand zone before moving up. So the thing is, right, when price come into the zone, right, you want to see at the closing price to see, as I say, whether you want to buy or this, right. Why did market go down here that we can't buy? Because the sell pressure is still strong. Sell pressure is still strong in this case. Still remember I say sell pressure, closing price. Closing price lower, closing price lower, sell pressure strong. Okay, don't buy. Okay, as price goes up here, there's still this selling pressure here. That's why price continue go down here. And this is where the selling pressure die off at this demand zone, and then price start to push up. Okay, and another way, if we want to another way to catch this kind of move, you might want to put a level at the nearest candle, which is the strong bearish pressure, which is here, this candle here. Okay, so if the daily close above this level, you want to look for your buy in your H4. That is another way you can approach this. Okay, so but since right now price have touched here and move up here, right, so there is chance that price may break this area in future. Okay, let's see. Strong selling pressure. Market's moving down. Still moving down. Sideways. Move up. That is where it go very high. So sideways, this is a false break, price goes down here, and that's where it break up. So you can see from a sideways, right, from sideways movement, price went up first and people thought it's a breakout, but the best thing is to wait until price came down into the higher low, until here the higher low, and then weak sell momentum, and then we can look for a buy. So you all need to backtest in order to formulate a process out from it. Okay, so as I say, price is keep on going up and up, and very steep, right? So in this case, it's a bit more risky for a buy. Instead, we can look for a sell around this zone here, which is very strong, as price have trouble in the past. No push up. Starting to push up. After a downtrend, it's moving sideways. So now in this case, price is in a downtrend, creating lower lows and lower highs. Lower highs here, not beaten. Lower high here, not close. Lower high here, not close. So there's still no uptrend. This is the latest lower high here. Now price is starting to move a bit up. Last low is here. Break of structure. Should price come up, it might retest before go low. So in this case, this is the retest. So we can see that the market is performing very nice into a downtrend, right? Lower high, lower high, lower high. Take a breather, continue downtrend. You can see it from here. Strong downtrend, sideways movement, continuation downtrend, sideways movement. Okay, so now you can see why I say you or see still sell, right? Alright, that is the reason why, and that's how you define the trend. Okay, but there is a lot of practice that you guys need to do in order for you to understand trend. Alright, just remember on the market structure and the one that I share with you, so you have to, you know, go back and forth into this thing that I share with you. Okay, and this is only this is my personal reference that I do to teach my students, alright, which I'm sharing with you guys. Alright, so we do a lot of back testing and a lot of theory in terms of, but just don't forget the process. Okay, as far as I'm concerned, that's the only way that I can share with you. I already share you about the example about uptrend, okay, and then the downtrend, and when can you capitalize and what you should do. And I think that's all for me. I don't think I got nothing else to add. Okay, so understanding trends and methods to define the trend. Okay, that methods to define trend I already told you. And usually, for instance, right, let me give you another example before we end this. Okay, be very careful before you define an end of a trend. Okay, usually before we define an end of a trend, if market close around here, right, we want to in this case, right, even though price close above this previous high low, right, we want to know what happens down here. Okay, we want to know what's happened down there, because price can still push up. Okay, and people thought that it will break the higher high here, but in actual sense, it just got liquidity to go lower. Okay, it can also happen this way. So that is where you have to learn about inside bar. You have to learn about double top, which is in this case, this one's a double top. Okay, this one's a double top. Okay, and then we can see price liquidity grab in this case. Alright, and then price has been overextended towards the upside, and that will be another lesson. Alright, so be very careful before you define the end of a trend. Okay, but when it starts, if price, in this case price has been going down, and in this case, right, and price overall is still in the demand, right, then price can still go up, of course, why not? Okay, so it all depends on how far have price fallen and how high have price risen. Okay, you want to look at from that perspective. It's not as straightforward as we all think it is. It takes a lot of practice as well. Alright, so that's all from me. So you can just do drop me a comment if you find anything that you need slightly more explanation in terms of defining trends. Alright, cheers.